And now with the latest business and market news, over to Jane Edwards.
Thanks, Alan. Despite all the gloom about debt in the US and Eurozone, Wall Street investors took solace in some good earnings results on Friday and bought up stocks. The Nasdaq posted the best gain, jumping by 1%. Tech giant Google cheered up share investors by roundly beating profit expectations. It added 13% and lifted other internet stocks with it. It overshadowed a fall in US consumer sentiment and the ongoing political stalemate over the US debt ceiling, which caused both major ratings agencies to threaten a US credit downgrade. Across in Europe, there was relief as only 8 Eurozone banks failed their latest stress tests, when up to 15 had been expected to fall short. But Friday's share price reprieve is likely to be temporary, and the gold price soared to a new record as investors searched for a safer asset. World share markets were all in the red over the week, with the US, UK and Japan each losing 2% and Europe and Australia diving by 4%. With more on that, here's Tome Elliot.
Well, as you just heard, the Australian share market, like so many other stock markets around the world, had a pretty torrid week, and it wasn't difficult to see why. We've got the carbon tax locally and, of course, the ongoing debt crises in both the US and Europe. Interestingly, with the carbon tax, some of the stocks that were perceived to be losers as a result, and I'm talking about companies like BlueScope Steel, One Steel, Qantas and Virgin Blue, well, they were all sold off heavily during the week. News Corp, of course, it's been in the news as well as making the news. It decided to formally drop its bid for UK satellite broadcaster B Sky B. The ongoing problems that News Corp is facing means the shares have continued to be sold. Gold was one of the few winners during the week. The gold price went up as the US dollar went down. As a result, the nation's biggest gold producer, Newcrest Mining, was bought up by investors. Another sector that actually did pretty well due to corporate activity was coal. Now, coal is perceived to be a loser as a result of the carbon tax, but not if you export it. Macarthur Coal is one of the biggest exporters of coal for steel making. It received a takeover bid at $15.50 a share from a consortium of Peabody and ArcelorMittal, and the share price has risen the past few days as people begin to speculate that another bid is not beyond the realms of possibility. Other stocks like Whitehaven Coal and Gloucester Coal were also bought up as well. Turning to the retail sector, and what a terrible time it had. Firstly, David Jones announced a shock profit downgrade, and its shares have been sold off to a post-global financial crisis low. Other retailing stocks like Myer, JB Hi-Fi, Harvey Norman also felt the ill winds of selling. Bank stocks also sold off during the week, again because of that debt crisis and because local housing prices appear to be on the slide. And finally, BHP was sold off during the week. That's because it's decided to spend $12 billion buying US energy company PetroHawk. As a result, both it and Woodside Petroleum fell because many people think that Woodside is no longer a takeover target for BHP. Winner of the week is Celestis, up a respectable 20% after receiving an improved takeover offer. Loser of the week is Carbon Energy, down 21% after being charged with breaching environmental guidelines at its Queensland gas project.